I think that's right. I think even in the case of the US, things are a little bit less certain than they might have been a couple of weeks ago. If you look at what's going on in the US market over the past couple of weeks, what we've seen is a drop in terms of interest rate expectations right up at the front end of the curve. I think that's reflected the fact that some of the data has been a little bit weaker than expected since the end of January. In a sense, that has almost been a positive thing, or started to be a positive thing for the equity market, which had perhaps become a little bit too concerned about how higher US interest rates and less liquidity from the Fed would actually affect US equities. But I think even the economic growth situation in the US in the very near term is a little bit uncertain. As you mentioned, in China, the concern is that very clearly we're getting signals from the government and from the PBOC that deleveraging is to be taken seriously nowadays, that they are perfectly willing to countenance higher short-term interest rates and more money market volatility in order to choke off bank lending. But the concern in terms of the equity market is what impact will that have on stocks? Once again, we've had the Chinese equity market being the worst performer in Asia since the beginning of this year. The only difference this time around is it's vying with Japan. Japan has started off very softly this year, and it had been a very good performer early on in the years over the past couple of years. Well, I'm afraid I think that the near-term outlook is probably still a little bit negative for the Asian equity markets. What we're expecting is to continue to see China being very much a driver, and we do think that Chinese equities can continue to pull back. We have had a decline in sort of almost up to 10% since the beginning of this year, but unfortunately we think that can continue a little bit until at least the end of Q1. So I would remain very, very defensive. I think at least in the Asian markets we're going to get better levels at which to buy. So I think the right strategy to do is be waiting for more attractive levels at which to buy. I think there are some more interesting opportunities in terms of sectors. What we're seeing at the moment is some sectors getting very inexpensive, typically the more defensive sectors, particularly in China. Some of the sectors which are more sensitive to things like building materials are getting very inexpensive. And we're going to get an opportunity, I think, at the end of Q1 where these markets will trade very cheap on a price-to-book basis. But I really think it's a time where you need to be very patient in terms of looking for the opportunities and waiting for at least another 6 weeks before you start moving back into the markets.